Good afternoon. Happy Easter weekend to everybody. Want to start off with a quick discussion of the Dow, or the U.S. markets. Started the week at 20,700 points, and as of close of yesterday, because the markets are closed today, we were at 20,400 points, so down about 300 points on the week. A couple reasons for that, probably the biggest being geopolitical issues. Of course, the conflict of Syria, the potential change in the presidency of Donald Trump from a economically focused president to a war focused presidency has an effect on the markets and volatility, as we've been discussing. It's a systemic effect, and it will continue. I think every video we've done so far, we've mentioned some sort of systemic risk, and this is another one. So expectations going forward, I'm sure more will come out on the Syria conflict. More will come out on how Trump's presidency and administration are going to deal with it, and that might affect their tax policies. It might affect a lot of other things that he had on the agenda, so we'll keep an eye on it. Biggest headline maker this week is the United scandal. If you don't know about it, I'd be very surprised, but our take on it, because you can read lots of different articles or videos and probably just pull on Fox News or something right now and actually just I'm sure they're just covering it 24/7. That being said, this is a classic example of why you diversify, why you don't just put all your money or all your eggs in one basket, as they say. This was some terrible judgment call by some employees. I'm sure it's not United's policy to handle things this way. And now they have a PR nightmare to deal with. And everyone's talking about how much money Dr. Dow's going to get in a lawsuit, which, you know, it's going to be millions of dollars, I'm sure, by the time it's all settled. But the real loss, United's stock in value is down about $1 billion right now. That's a lot of money. If you're an investor into United, you're not happy right now. And that's why we diversify. We diversify because weird things happen. And it's got to, if you own thousands of stocks, hundreds of stocks globally diversified, something weird like this happens, there might be a little effect to your portfolio, but nothing to lose sleep about. Interesting about airlines, though, is Warren Buffett recently made a huge investment into airlines. He's a value-based investor, so he tries to invest in companies that are trading below its value, and over time, that stock price grows rapidly or faster than the market, and he makes money. So he sees a lot of value in airline stocks, which is really interesting because for the last decade, or as long as I can remember, nobody's really liked airline stocks, with maybe the exception of Southwest. But he did this with the railroads probably a decade ago, I think, and I remember him doing it and everyone thinking, you're crazy. Why would you do that with railroads, who, at the time where everybody was thinking we're on the out? He made a lot of money on that investment when the oil and gas markets changed and they started using railroad as a, I wouldn't say primary, but as a useful source in the logistics of transporting oil and gas products. So he knows what he's doing, so we'll keep an eye on it. Another headline maker is more on the retail apocalypse. Walmart recently announced it's going to offer discounts to 1 million items that are purchased online. But the stipulation to get the discount is that you've got to actually go to the store and pick up the item to get the discount. I think it's just more innovation from Walmart to try and keep up with Amazon. You know, it costs a lot of money. Michael was doing some research on this, and apparently the most expensive part of actually getting the item to your house is the last part, the delivery. So by cutting out the delivery and moving it to the store and forcing you to go into the brick and mortar store to pick it up, there's two benefits. Save some costs there, and you're in the store, so hopefully you do a little shopping and you purchase a few things while you're there. Again, another great way to innovate on Walmart's front. They're trying to compete as best they can with the Amazons of the world, and I think they're doing a pretty good job. So does the stock market, by the way. So do investors. And finally, Michael wrote a great article this week on fee-only advisors versus commission-based advisors, and why we believe the fee-only approach is the most objective, the most fair, and the most transparent. it looks at the conflicts of interest that commission-based advisors must face. I think anybody that's ever sold a product for commissions have faced it, and that is the big question is, if you've got two products in front of you, one that pays a higher commission to the other, you've got to separate your emotions, that greed of I want to make a lot of money, in order to offer sometimes the best and the most well-fitting product to that client, even though it may cost you a little bit in commission. That conflict of interest is faced all the time by commission-based advisors, and there's some very good ones that deal with it well, and there's of course very bad ones that probably always go the higher commission route. It's just good to understand that world, to know that it exists, and so go check out that article. It's on our blog. We're going to use it in other things as well because it's very good and very clear. We've certainly enjoyed doing these videos. We love your feedback. Keep it coming. Have a great Easter. We'll see you next week.